right, welcome everybody to the Doe Show. Happy Thursday. Welcome, welcome. Today, let's put it this way. I'm going to take a few bullets. I've accepted it. I'm going to talk about index funds, and most people are probably going to agree or disagree, or some people are going to agree, some people are going to disagree, and I'm likely going to take some bullets for that in the comments section, and that's understandable. Just understand, in investing, there is more than one way to make a profit. The old saying is the only wrong way to invest is the way that loses money. I'm going to take it a step further today and try to help you out. My name is Dustin. I'm a financial advisor with Jazz Wealth Managers. We manage investments for you. We handle everything. We're an investment service financial advisor that does things a little bit differently. First of all, we are newly SEC registered, so we are regulated by the biggest guys in the room, really, or on the planet, the Securities and Exchange Commission. We're so excited about that, by the way. And so that's one thing. The other thing is we manage our own portfolios, and against their initial wishes, we posted our performance on our website. So you could see all of our funds, how do they perform, and of course they're all expense ratio free. They don't cost you anything to participate in those funds because we manage them. We build them, we manage them, and that's what we do here at Jazz Wealth. So if you have a retirement account, you're starting a retirement account, or looking to transfer a retirement account or long-term investment account, be sure to check us out. Well, some of the investments in your retirement accounts may be index funds. And it's really a hot button topic because the people who seem to be financial gurus or very well off financially tend to suggest index funds. And they say most of you should be buying index funds. And I go, oh, great, okay, it's a great investment. But I have a few hiccups that I want to talk about that maybe make it not worth it for some people, and of course make it 100% worth it for others. So here we go. Index funds, most people use them because they're easy to use. Simple as that. You pick one, you buy it, you're done. You never have to look back at it. Performance. A lot of people say you can't beat the market. Those people are wrong and very clearly undereducated in the investment world, but they say you can't beat the market, so just join it. It's the old saying, you can't beat them, so why not just join them? Well, you can beat them. I'm going to give you examples of funds that beat them consistently and go through a few things there. Cost. The number one reason people choose index funds is cost, because you're sold the idea that you need to pay as little as possible. And I'm going to show you today how you don't even have to pay anything if you don't want to. But cost is a big one. I also want you to think about that in terms of what you get in the real world. If you buy an air conditioner and you buy the cheapest one, what do you get? Right? So keep that in mind. You don't buy the cheapest car, you don't buy the cheapest food, things like that. But cost, that's a valid argument. And diversity. The idea that you could diversify across the index, whichever one it may be, and with just one click of a button, have it taken care of. So there's a lot of great arguments for index funds, but I get to talk to a lot of people every day, and I get to answer a lot of emails, and of course Jazz Wealth gets a lot of emails, and I see people doing a lot of it wrong. And I'm not saying that because I want you to come use us here at Jazz Wealth. I'm saying the people that should be using index funds and should not be using us, they're doing it wrong. So here's the first thing. Ease of use. Remember that you're investing for a goal. Please remember I said this. If you watch this and you disagree with everything I say, just remember I said this one thing. You're investing for a goal. You use what you need to use to get to that goal, right? Very simple. I'll give you a great example. We're renovating my mother's house right now, and I wanted to do the demo. I went over there with this little tiny hammer, and my goal was to knock down everything in the whole house. It would have taken me years to knock everything down. I realized that, went down to Home Depot, I bought the biggest hammer I could find with the long handle on it, and I wound that thing up and smashed everything down in about an hour and a half, had the whole house completely empty. It was a lot of fun. So the goal was to knock the cabinets down. The product that I was initially using wasn't getting the job done. Well, a lot of times in investing, you just randomly throw money at your investment accounts and you hope that you're doing the right thing. I always tell you guys, invest for a goal. It may be a dollar amount, it may be a time period, it may be something you want to buy in the future, but make sure you have that goal in mind. If your goal is to buy a house in 5 years, for some reason everybody I talked to yesterday wanted to buy a house in 5 years, maybe it'll be good timing, we'll see. But that was their goal. And an index fund is not what they should be using for that goal. That's too much risk for a 5-year period. So in that case, an index fund, although it's easy to use, the performance will track whatever market, it's low cost and it's diversified, is not the best vehicle for someone buying a house in 5 years, okay? So remember that you are always investing for a goal. If your goal is to have $25,000 for retirement for a house in 5 years, then we need to work on that goal relative to the right amount of risk, not some benchmark. I don't care what the benchmark does. I need to get you to your goal. So to me, the S&P 500 could wiggle around up 10%, down percent, down 10%. The Dow could be up 10, down 10. I don't care. I need to get you to the goal of $25,000 for your house in 5 years, taking the appropriate amount of risk. So just remember that although they're easy to use and easy to click that button, is it the right investment for you? If you have 30 years left to go and that's what you want to choose, then all of this sort of checks your box, right? And that might be a good one to use. I'm going to give you one little quick example. There's a stock symbol, United Technologies, UTX. Now this person's not a customer, so I can talk about them, and I'm going to talk detailed about them. He's a good friend of mine, lives on the other coast of Florida, and every single day he represents 1/3 of the trading volume on the symbol UTX. So he's in there buying and selling millions of dollars a day. He's not like a billionaire by any means, but he buys and sells and buys and sells and buys and sells. And he does that for the first 3 hours of every single day, and he makes his living a very, very good living. You gotta see this brother's house, man. It's nice. So lives over on the Palm Coast on the water and everything. Every day he wakes up and he is 1/3 the volume of the stock UTX. So if you ever wake up and you see United Technologies is trading with 8 million shares, 8 million shares, 8 million shares, and all of a sudden one day it's 2.5 million shares less, he took the day off. And it's so cool to see that, because you can see when he takes a day off, because he leaves and he doesn't trade that day. He represents 1/3 of the volume. Now because of that, he actually has to register with the SEC, gets his own code name. It's a long string of numbers, so we all know what he's doing on that stock. It's called a large trader certification or something that's required if you trade that much, okay? So in that example, do you think he cares what an index does? Right? He's gotten so good at buying and selling millions of times, or trading millions of shares, he's gotten so good at that it doesn't matter what the S&P does. He has no idea where the stock market's at, if it's high or low. I'm sure he checks in on it, but that doesn't result in the dollars. His goal is to trade one stock every day, and he is phenomenal at it. It is an incredible. They should make a news story or a TV story about him. It is incredible. Probably bore a lot of people, but I find it fascinating to watch. Anyways, so the goal for him is not to use an index fund. Now he's a different example. If you're a trader, a short-term trader, and you like to buy and sell stocks, then your goal is to make sure you're benchmarking you against yourself, right? If you buy and sell stocks and in 1 year you made 11% or 5% or whatever, then the next year, don't you just want to beat yourself? Do you really care what an index does, right? So think about that. Always invest for a goal. Okay. Next thing, performance. So an index fund, most people say you can't beat the market, Dustin, so therefore you should just buy an index fund. Well, I have a couple arguments against that, and I'll try not to rant too much, but number one, yes, you 100% can beat the market. When you talk about the market, it is usually referred as the S&P 500. That's usually what everybody's talking about. The S&P 500 is a benchmark that was man-made and created by a guy who said, or a group of people, and still a group of people, that say, this is the benchmark. We are going to follow this performance. If I wanted to do, why couldn't I pick Apple, Amazon, Verizon to keep things a little slow, maybe put some Ford in there, United Airlines? Why couldn't I call that Dustin's Magic Index? There you go. They're the same thing. S&P 500 is an index that was created by Standard & Poor's. Dustin's Magic Index was just magically created out of thin air. If I got everybody to focus on this as the benchmark, you could very easily beat that index. There would be nothing to it. You just need a product or a group of products that moves faster than my index. So when people post the comments or they reply back to me and say, Dustin, you can't beat the markets and that's why I use an index fund, kind of know that I'm laughing at you a little bit, because you just revealed to me that you really don't know anything else besides the market. You don't know anything else besides a book that you read by Tony Robbins or somebody that said buy index funds. So now I know what level you're at, and I want to help teach you a little bit, but you certainly can beat the markets. And I'll give you another great example. If you can't beat the markets, then why is Dave Ramsey so popular? Dave Ramsey claims, I'm getting better, I've been listening more and more to him now. So Dave Ramsey claims that he beats the market by 5+% every year. Not on average, he says every single year. So if it's not possible to beat the market, how does a guy that's not even an investor, like he doesn't come with a market background, he's a personal finance guru, and a good one apparently. So how does he do it? Why doesn't anybody give him any grief? So think about that. Yes, you can beat the market. It is a benchmark that's man-made, and so that's it. Now, as far as performance, when you buy an index fund, which one do you buy? Everybody goes, I need to buy an index fund because they're cheap and you can't beat the market. And my answer when I talk to people is always, okay, which one do you pick? And they always say it's a Vanguard ETF. And I go, well, that's great, but which index are you trying to invest in? There's many indexes. Now, there's a couple that are really popular. Everybody always goes S&P 500. And if I ask you, why did you pick the S&P 500? Nobody knows. Not one person gives me a good answer to say that's why they picked it. You want to know a little fact here, by the way? Everybody that I've talked to, I've told this, but if you really want the best performance, the S&P 500 is not the best index. Historically, by far, it is not the best index to invest in. If your goal is to beat the S&P 500, then you just buy the S&P 600 small cap. That will beat the market. And if you want to measure the market as the S&P 500, then just buy that, right? So this idea that you have to invest in an index, you just do it because somebody said, or Warren Buffett, and a respectable figure, says go buy index funds. But they never tell you which ones to buy. And so you just do it blindly because you were told to do that. Stop doing that. This is your money, right? That's like when someone repairs your house and someone wants to fix your garage door. Do you just go pick a random person because everybody says call this company? Right? No, you get reviews. You get someone that's good at it. Do you have any experience fixing my garage door? Hey, mine's made out of this or that. Can you fix that? And so you really want to look at that. Why are you investing in index funds if you don't know what the underlying reason is, okay? Performance-wise, take this with you. By far, you want to invest in the S&P 600 small cap if your goal is performance. So if you said, I just want the best index to invest in, Dustin. Nobody ever asked that, by the way. What's the best index to invest in? Most people go, I just picked the S&P 500 because someone told me to. They were wrong. Unfortunately, they didn't do extra research for you. They just wrote a book or wrote a blog or whatever, and they weren't able or smart enough to look into it and go, oh, the S&P 600 small cap historically beats the S&P 500, the Dow, the NASDAQ, the Russell 2000, you name it, it beats it. So ask yourself that. I'm going to invest in index funds. I see you guys posting VOO, right? Why'd you pick that one? So Kevin, out of curiosity, why'd you pick VOO? Okay. Think about it. Can we answer that question specifically? And if it's that, you got 24 shares, that's good. But why VOO? If now you know that the best one is actually over here, it's not over here, why not go for that one? It's an index fund. And if the goal is to invest in an index fund, don't you want to pick the best one? So really think about that, guys. And I know I'm ranting a little bit today, but the idea for me today with this video is just to get you to think. Go wherever you want and invest. I hope you'll choose us at Jazz Wealth, of course, but go wherever and make sure you're getting the best that you're supposed to get for your goals. Okay, cost. Number 3, cost. I didn't actually do it. Cost, most people go, well, an index fund, I don't have to have someone manage my money. I can just buy and sell it and that'll be all that great. Okay, fine. If you want to invest in the S&P 500, why are you buying an exchange traded fund? You don't need VOO. You don't need VT, whatever it is, all the other ones. You don't need the SPY. If you want to invest in the S&P 500, just buy the S&P 500. You could buy it for free with no expense ratio, with no cost or nothing. Did you know that? Right? I have yet to talk to one single person, an investor, like you guys. I've never talked to one person that said, Dustin, why are we buying an exchange traded fund when we can just buy the S&P 500 without paying a dime? Just buy it directly. Because most people don't do the research to figure out you can actually do that. You just are sold the world of ETFs. Everybody says low-cost ETF exchange traded fund. I want you to question people, and not just in finance. If a guy says, I'm going to mow your lawn using this lawnmower, I want you to go, right, we got to wire this way instead. Very valid argument for why he was going to do it. I want you to ask the question. So when I'm buying an ETF, why not just buy the index? This thing, diversity of VOO, diversify by just buying the S&P 500 problem. Remember that? So 600, 2,000, 1,000, 5,000, or 30 stocks, right? Depending on the stocks is a fair, as long as it's something not all in the tech sector. Then. And I see this all the time. I'm not like the other people on YouTube that just give you general advice. The advice I give you is generally because I keep talking to people and I hear little mistakes you're making, so I just want to point it out to everybody. Okay, if you have an investment account, let's say you went to, I don't know, Robinhood, right? Let's say you're at Robinhood. Professional Wall Street, they're all laughing at you for choosing Robinhood. And they're like, well, in my Robinhood account today, I bought this or that. They don't use them. This is for the retail trader who has costs instead of trading commission, and you think you can do it better yourself. You buy an index fund. You learned something today, and so you bought right? And you said, well, if that's the best index, I never thought to ask what's the best index. So you went and you did that inside your Robinhood account. You can't, I don't think you can do it in there, but let's just say you did. So now you have this. Here's what happens. Everybody buys the index fund and you're supposed to walk away. You're not supposed to touch it. An index fund is a super, super, super passive way to invest. But what happens is every one of you goes, I bought an index fund, I check in on it every day, I see it moving around a little bit, and so then I bought some shares of Apple. And I go, okay, but you bought the index fund. Oh, I know, but it got me excited and I bought some shares of Apple. I'm like, okay, well, what's the goal with that Apple? Are you going to sell it? And they go, no, I'll just hold on to it for a while. Oh, and then later on, Dustin, I bought some Tilray. I got excited because they're pot stocks and I thought that'd be cool, so I bought some Tilray. Now I've got my index fund and I've got some stocks. Stop it. Stop it, stop it, stop it. That's always what I say to people. Quit it. If you're passive investing, don't actively invest in there, because what's the argument for index funds? Is that you can't beat the market. So if you bought into this argument that you can't beat the market, what are you trying to beat the market for? If it can't be done and you believe that, which I totally told you can, then why are you buying stocks? If this index fund averages at 10%, just as an example, and you're over here buying and selling, guarantee you're not going to make any money, right? You may be making money now, but I guarantee you in the long run, you will not make money buying and selling stocks. I have taught thousands of people all over the world that it doesn't matter what your nationality is, what country you're from, doesn't matter your age, doesn't matter your gender, doesn't matter what gender you think you are. You cannot, most of you will not make money buying and selling stocks. Here's the tip. Right now, everybody is making money buying stocks. The saying that I used yesterday, a rising tide lifts all boats. Right now, everything's moving higher, mostly. So it's easy to make money. You're being misled into thinking that you can make money over the long term. I promise you, tough times are coming for you trying to trade. And what happens if this falls, right? Now you're taking away from your index fund. If you lose 6% over here, just buying and selling, you'd have been better off paying a guy to manage the funds for you so you'd keep your paws off your dough, right? So be very careful. I have a rule. If you're going to choose an index fund, by all means, choose the index fund. I think you should choose multiple index funds, to be honest with you. Choose it and leave it alone. Have a separate account for your active trading. Have some fun with that. Most of our customers are actually active traders. So cool, because I get to talk shop with them all the time. I handle their long-term investments. We make sure that this is doing well. You go trade, have a great time, and then we'll talk about it as you go. We have traders that are solely options traders, futures traders, but they're doing their own thing. The guy that I talked about, he trades one stock, right? That's his deal. But in the meantime, don't mess up your retirement, guys. Come on, that's so hard. That's such a tough one there. I hate to see that. So, like I said, I know some of you are going to highly disagree. I'm going to take some bullets for this one. You're going to try to argue that index funds are 100% the best way to go. Like I said when I started this video, this class today, there is more than one way to invest. And if you choose that way, I have no problem with it. Don't you dare go active trading in your index fund account. I want you, number one, to remember that. Number two, pick the best index. Don't just randomly pick an index or pick the one that everybody else is picking, because all the smart people are picking that other one that I mentioned earlier, right? So that's number two. Number three, you've got your passive investing, you've got the best fund for you to choose the best index. And number three, ask questions. Constantly ask questions about why are you being asked to do this? Why are you moving your money that way? And number four, just invest directly in the index, right? You can't probably do it in Robinhood, but just go buy the index directly. Skip everything. If cost is that important to you, don't call me. I can't help you because I'm going to charge you. I'll be honest with you. We're going to charge to manage your account, okay? Don't call me, right? Go get a brokerage account and just buy the index directly, zero cost. Most of them will actually let you do the transaction with no cost, zero. So why not do that if cost is something that you want to focus on? Okay, that's all. I told you it'd be a little bit of a rant today. What about a small percentage of your retirement in index funds like the Russell 2000? Adam, I know that was a minute ago. It seems like we've answered that question. Living life. I'm glad you're watching. That's awesome. You think Dave Ramsey has a guy working for him? I'm pretty confident he does. I'm pretty confident I know who it is as well. But still, that's only for the... Now, I'm not saying he's not getting those returns. A guy like that does not get to his status by lying to people. So I by no means am saying that he's lying to you. I'm just saying, why does nobody give him any grief? If you buy the premise that you can't beat the market, here's a guy saying, I'm beating it by 5% a year. Something interesting, huh? Tony Robbins said, that's a big dude, by the way. I got to meet him. This S&P small cap had a 31% increase in the last 20 months. The S&P 500. Oh, so you're giving me some stats there. I like it. Thank you. Look back historically, though. Go as far back as you can. We go back, I mean, every study I do, I like to go back to 1950. It's not possible with that study, but go back all the way as far as you can. It beats it. S&P 600 small cap. Yeah. Video breaking up. Oh, that sucks. Yeah, I see that YouTube gave like 3 warnings there that it was slowing down. No problem. It seems like it's caught up now. Everything should be good. You don't own ETFs. You can build your own index. In fact, you can buy every company in SP individually. Along the way, you'll find companies you would omit. Punk and disorderly grammar. So that now we're getting into, you're just going to build the S&P 500. Nowadays, you certainly can. But now if you're going to start plucking stuff out that you don't like, now you can't compare your results to the S&P 500. You might end up doing better. I bet you do. So you're not going to use a benchmark, and that's another great argument for saying, screw the benchmark. Measure yourself against yourself relative to your goal. Don't let people tell you to focus on everybody's got you looking over here. Look at your stuff. Who cares what they're doing? Look at your money. Your dough at the end of the day is all that matters. Doesn't matter what happens in the S&P. There's one of our pot stock guys. You missed out on the Tilray. Ah, well, something tells me you'll have your chance again. Anyways, that's the end of our show today. Thank you so much for watching. We'll wrap it up here. We'll be back at 5 o'clock to cover the stock market, give you the good, the bad, and the ugly there. A little down day today, actually. So be sure to tune in there. Hey, by the way, I'm going to say this more and more. Next year, I'm going to be doing a series of speeches, conferences, and things. And the argument is going to be that young people, young meaning under 40, do care about their retirement. And I want to show them that you do care about your retirement. So I need the subscriber numbers to go up. I don't care about anything else besides that number going up. So when I do these speeches next year, I can say, look at all the people that watch these videos about retirement investing in general. I want to do that speech and be able to put a number up on the screen that says, You guys are wrong. Your studies that say the young population doesn't care about retirement is absolute crap, because look, and I want to be able to show them. So do me a favor. It doesn't cost anything. I'm not going to bug you. Nobody emails you. Hit the subscribe button if you would. I'm going to mention that on every video to try to build that up. So when I do those talks next year, we can make a big splash and show like, look, everybody's watching. So I appreciate it. Thank you so much. We'll see you at 5 o'clock for the closing beat.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.